My name is Terry Ross, and I'm the Director of the Center for Corporate Sustainability at the Haskayne School of Business. The Center for Corporate Sustainability works with the local, national, and international community collaboratively to form working partnerships to support local sustainability efforts, meaningful academic research, and meaningful student experiences. Welcome to the Enbridge Research in Action Speaker Series on financing sustainable projects. Thank you for joining us today. The Enbridge Research in Action Seminar aims to create a greater understanding of the nuances of financing sustainable projects using examples from Canada, America, and across the world. We're going to explore how these projects are financed and what's important for you to know as practitioners in this space. But before we dig into this engaging topic, I have an acknowledgement to make that the University of Calgary gratefully acknowledges that this event is being held on the traditional territories of the Treaty 7 region of Southern Alberta, which includes the Blackfoot Confederacy, the Tsuut'ina Nation, and the Stoney Nakoda. The City of Calgary is also home to the Métis region of Alberta, or the Métis Region 3. The panel will be discussing the financing of clean energy projects for about 30 minutes, and then we'll be taking questions from the audience. So if you have a succinct question, please use the Q&A function, as well as upvoting any questions that you may have. The event will be made available online afterwards and is recorded. So it's my great pleasure now to turn over the discussion to the panel. I'll introduce first Dan Balaban, CEO of Greengate Power, Nick Blitterswyk, CEO of UGE International, Curtis Probst, co-CEO of the New York City Energy Efficiency Corporation, and Janice Tran, CEO of Kanin Energy, who also will be moderating today's discussion. I'll turn it over to Janice.
Perfect. Thanks, Terry. All right. Well, good morning, everyone, and thank you for joining us today for what is guaranteed to be a lively discussion. The focus of today's conversation will be on clean energy and finance, and we brought a great group of panelists that are leaders in the clean energy world across Canada, the United States, and the globe. So like Terry said, my name is Janice Tran. I'm the CEO of Kanin Energy, a Calgary-based clean energy company, and I have a background in clean energy project finance. So hence why I'm moderating the panel today. I've worked in Silicon Valley and New York across multiple clean energy topics and industries. And I'm also a proud alumni of the University of Calgary, and I'm glad to be back virtually to host this panel today. So to kick things off, I'm going to ask each panelist to give their name, their background, and their opening statement. So let's start with Dan.
Yeah, thank you, Janice, and hello, everyone. Thank you for joining us today. So my name is Dan Balaban. I'm the co-founder, president, and CEO of a renewable energy company called Greengate Power. What we do is we develop renewable energy projects of unprecedented scale. We've been doing it for almost 15 years here in Alberta. We've developed so far about $1 billion of renewable energy projects that are operating in the province. And we are set to start construction next year on a close to $750 million solar project also here in Alberta. So we've been developing, renewable energy in the heart of oil country for a while. I think that gives me an interesting perspective on energy transition. It's a topic that's of great interest at the moment. And I think it's been framed in a very adversarial way. It's been framed as fossil fuels versus renewables. But I think we can and should be developing both. That said, energy transition is accelerating. There's been tremendous advances in renewable energy. And as Mark Carney recently put it, the decarbonization of our energy system is the greatest commercial opportunity of our time. So look forward to touching on that some more in this panel. Thank you.
Amazing. All right. So maybe Nick, do you want to kick things off?
Yeah, sounds good, Janice. Thanks so much. And thanks to the University of Calgary for having myself and putting together this event. And like yourself, Janice, a proud alumni of the University of Calgary as well. So my name is Nick Blitterswyk, and the founder and CEO of UGE. We're a developer of commercial and community scale projects right now, mostly in US, sometimes in Canada, and we do some work over in Asia as well. Started the company about 10 or 11 years ago, and so the last decade was a really exciting time for this transition to get started. But I think looking at the decade ahead, I would say I'm like that much more excited about what's going to happen in this next decade, just given the evolution of the economics of projects, the evolution of how we finance them, and the readiness of the ability of finance as well, and so on. So yeah, looking forward to the panel discussion as well.
Great, thank you, Nick. And last but not least, Curtis.
Good afternoon, and also a big thanks to University of Calgary for hosting this event. So my name is Curtis Probst. I'm also a proud University of Calgary graduate and a born and bred Calgarian. After graduating from University of Calgary, I moved to New York and spent 24 years on Wall Street, most recently at Goldman Sachs in senior leadership positions where I spent 15 years. Since then, I've focused my professional energies on the intersection of environmental sustainability and finance. For over 3 years, I was managing director and head of sustainable finance for the US-based global energy think tank, Rocky Mountain Institute. For the last 2.5 years, I've been co-CEO of New York City Energy Efficiency Corporation, a public-private philanthropic partnership, or P4, focused on financing renewable energy and energy efficiency in New York City and the surrounding region. We focus especially on clean energy deployment in disadvantaged communities throughout the region. Additionally, I've taught for 5 years at Columbia University in New York, and beginning January, I'll be teaching an online course in financing clean energy at the University of Calgary. Fossil fuels remain very important in our daily lives and will continue to be important for the foreseeable future. At the same time, there's a massive shift taking place in the global energy landscape. Energy efficiency and renewable energy are needed to mitigate the worst impacts of climate change. Meanwhile, clean energy projects and businesses are providing stellar returns in many cases to investors and providing jobs and economic development to communities around the world. Transitions can be hard, but I believe the clean energy transition is truly a once-in-a-generation opportunity. And given that energy is in its DNA, I believe that Calgarians, Albertans, and Canadians can be leaders in the clean energy transition.
Great. Thanks, Curtis, for that. And thanks, everyone, for the opening statement. So definitely going to be a lively conversation here, and can't wait to get started. All right, so first question. So renewables are increasingly disrupting traditional energy systems as they undercut the cost of traditional energy sources, like coal and even gas, where we see a lot of Alberta's energy sources today. So where are we today, and what macro trends do you envision going forward? Maybe we'll start with Nick on that one.
Sure, thanks, Janice. Well, I think from the the perspective of UGE, we only target we're on the number one, we're on the distributed side of things, right? So working directly with energy users, and the business model is specifically to target areas where those clients are going to save money. And if I go back in time 5 years, it was a lot harder to find those areas, but the UGE of like 2020, we've developed more projects this year than in the prior 10-year history of the company, as we really feel it's at an inflection point. And it's on that basis that the number of places where solar is just frankly cheaper than the grid or than the alternatives just continues to expand. So, I think that I'll briefly say that UGE is a public company. And so when I'm meeting with investors in different cities, I feel like the culture and the knowledge of where this sector is at varies quite greatly based on where you are. And I think that story about, hey, solar, it's no longer a niche thing, it's no longer program driven, but rather it's here on the world stage and in more and more places, just simply the cheapest form of energy.
Maybe if I could, follow up on that. So the narrative on renewables, for a long time was, we could be green, but comes at a cost. A lot of the places that took early action, saw early growth of renewables, did so by significantly providing significant incentives early on. So places like California, places like Germany and Europe, Ontario here in Canada, trying to take early action on climate change and trying to promote this industry. But the benefit of all those early incentives is that it resulted in significant R&D investment, significant scale up in manufacturing, and we've now reached the tipping point where renewables now make sense or are now competitive with fossil fuel alternatives on a subsidy-free basis. For example, solar costs have come down, solar module costs have come down 90% in the last decade. So things that were previously thought about renewables, things that were even common thinking 5 years ago no longer apply. And now that we've reached that tipping point, I think we're going to see an order of magnitude, more growth in renewables over the coming decade, all over the world.
Definitely. And Curtis, any thoughts here on your side, especially on the energy efficiency side?
Yeah, I guess, first of all, on the renewable side, not surprisingly, the two renewable energy developers that preceded me spoke about the favorable costs of renewable energy. But if you look at some of the studies that have been done, I mean, this isn't just something that is being hyped in the sector. Lazard, which many of you know, investment banking boutique firm based in New York, did their annual levelized cost of energy study within the last month. They released it. And the lowest cost sources of energy ranked are as follows: wind at $26 a megawatt hour, two forms of utility scale solar at $29 and $31 a megawatt hour, natural gas combined cycle coming in at fourth at $44 a megawatt hour, geothermal at fifth, community solar sixth, and coal a distant seventh. That's changed a lot over the last 10 years. Now, these are simply indices. Different projects will have different economics. Some of the things that Dan spoke about, for example, the project he's working on next year is going to have very attractive costs because of the scale. There are economies of scale to renewable energy, but you're really seeing the costs change the whole dynamic. And in many parts of the world that don't have access to hydrocarbons, they are pursuing renewables with incredible fervor. On the energy efficiency side, I'll just say quickly, energy efficiency is often the cheapest source of energy production. Just think about shutting off a light switch. There's no cost associated with that. Now, we don't all want to work in the dark, but we're all figuring out how to be more efficient with energy, whether it's for residential, commercial, industrial, or transportation applications. And we see incredibly attractive paybacks in the energy efficiency world as well.
Great. And the only thing that I would add to that, that question there is to pay attention to, as intermittent renewables bring the overall cost of power down, what do you do in the times when the intermittent renewables are not generating, and this concept of baseload power? And what are the business models and the technologies and even incentives that look at decarbonizing the baseload as the world moves forward in a renewable way? All right, so let's move on here. So another question: what are some of the misunderstandings about energy transition and the opportunities it can provide? Anyone want to start? Okay, I'm going to call on someone. Curtis?
I can. Okay.
No, go ahead, Dan.
Well, I'd say the common misconception, at least here in Alberta, which is a predominantly an oil-producing jurisdiction, is that the energy transition somehow means economic destruction, and that's not the case. I think what it means is an evolution of our economy here in Alberta. I think a necessary evolution. We're going to be evolving from an economy that's highly dependent on our fossil fuel resources today to an economy that's going to necessarily be more diversified, where oil and gas is still going to be an important part of our economy, but not the dominant part of our economy. And keeping it, as far as it relates to Alberta, we've got tremendous natural advantages as it relates to the clean energy transition. We have some of the best renewable energy resources in North America. We've got phenomenal onshore wind. We're the sunshine state of the north. Our solar resource in Alberta is as good as Florida's for the purposes of producing photovoltaic energy. So, you know, we've got lots of opportunity and potential. So, you know, I see energy transition as full of opportunity as opposed to being a threat.
Yeah, Janice, I'll jump in, and I appreciate you cold calling us. It's good to make sure we've done our homework for the day.
Just like in class.
Yeah, exactly. I think the biggest misconception is that this is an either or proposition. If you look at the largest solar project in Canada, it's in Alberta. If you look at the largest solar project in the United States, it's in Texas. If you look at the lowest cost of energy for a solar project anywhere in the world, it's in the Middle East. What do those three areas have in common beyond having incredibly efficient solar? They all operate in the hydrocarbon sector and are huge exporters of fossil fuels. So there is an opportunity to continue to harvest fossil fuels, but at the same time, make that transition, because there are countries that aren't blessed with fossil fuels that are moving very quickly to drive down that cost curve. So I think that's the biggest misconception I see.
Yeah, and Janice, maybe just to get my 2 cents in, I think that you know, Dan and Curtis both touched on the misconception side of things, and maybe the other side of that coin that I'll just touch on briefly is that I feel like in 2020 we probably made more progress in getting the word out there, or people taking notice of how far this industry's come than any year for a long period of time. So you know, I'm a bit optimistic actually that we're having this conversation and that people are catching on, because like Curtis was saying, it's a one-way street. It's you know, there's no U-turn happening here. Like this, the cost of solar is continuing to go down, and the quicker people realize that, the better.
Yep, I completely agree, and I think this goes to our last question, the narrative. But just to touch on it briefly, I think it's now adopting the internal narrative of accepting that clean energy is in our future, and how do we respond to that. All right. Okay, so let's go on to the next question here. And folks that are tuning in, please make sure to ask the questions in the Q&A box. We'll be pulling from that pretty shortly here. All right, so what are innovations in financing that are driving growth in sustainable projects? Any takers on this one?
Yeah, I'll start. There are a lot of innovations around finance. I guess we see a couple of things as big trends. One is green bonds, and a green bond isn't necessarily an innovative financing instrument, but it's recognizing that the bond is being used for purposes that are green or sustainable. Without getting into a lengthy sidebar on the definition of what constitutes green, green bonds have been very successful, and over time the cost of green bonds will start to be lower for issuers than conventional bonds. There is a tremendous amount of money that's looking to engage in ESG investing or socially responsible investing. It goes by many terms, but that's one innovation. The other one I'll mention is property assessed clean energy, or PACE. This is where businesses and consumers have an opportunity to pay for renewable energy, distributed renewable energy, or energy efficiency as part of their property tax bills. That addresses some of the barriers to financing energy efficiency, because the debt service stays with the property, so that if you move in 1, 3, 5, 10 years, the next owner of the property, you know, continues to pay the debt service, which is okay because they continue to reap the benefits of the energy efficiency or renewable energy investment that was made. So PACE has been a product that has been enjoyed significant growth. PACE loans have been pooled and securitized, driving the credit cost and the cost of capital down further. So that's just one of many innovations in the sector.
Happy to touch on that too there briefly, Janice. I think that over this last 10 years, again, I think that the misconceptions of 10 years ago might have just been a lack of maturity of the industry in terms of solar being a risky technology or what have you. I don't mean to be too solar centric here, but And I think over the last 10 years, it's really evolved to a point where, throughout the capital stack, all your standard forms of financing, from your senior debt to your mezz debt to your tax equity in the US to royalty models that are out there now too, green bonds that Curtis touched on, and so on and so forth, have all really come together to be available and make financing solar and renewable energy and energy efficiency projects that much more possible. And even with a cheaper cost of capital in some cases where green bonds are a cheaper source than non-green bonds. I think, we do some international work, and so I'll just briefly touch on that. You see this evolution happening in different markets at different speeds. It's not uncommon for us to see an international market where we are 5 years behind or what have you in terms of that maturation of the industry. But while there's really interesting innovations, there's also just the maturity of the industry, which is really driving the growth as well.
Janice, maybe I could add. Coming at it from our perspective, which is we've been involved in developing and financing utility scale renewables for quite some time. This is an industry that's been mature for a while. The technologies are well understood. Assessing the resource potential is well understood, and there's lots of institutional capital, both equity, debt, available for these projects. But I'd say that the key thing that's changed in the financing of utility scale renewables is the key commercial underpinning of a utility scale renewables project is a power purchase agreement, or an offtake, otherwise known as an offtake agreement. And typically, it was governments that were stepping in and offering power purchase agreements early on. So 10 or more years ago. It was typically governments that were coming in. The Ontario government, for example, would offer 20-year feed-in tariff contracts. Different places, did it differently. But what we're seeing increasingly is governments stepping out of that role as renewables are becoming increasingly low cost, and corporates are now stepping into that role. Big corporates like Google, Apple, Facebook, Amazon, the list goes on. Have all made 100% renewable energy commitments. Those commitments are accelerating. COVID, if anything, has just accelerated corporates' timelines for meeting their renewable commitments. And we're increasingly seeing corporates come in and offer contracts which are providing that same commercial underpinning that governments previously did. And for corporates, it's a great opportunity because it allows them to meet their corporate sustainability objectives, acquire renewable energy credits, and also manage their long-term power costs, given that renewables are also extremely low cost right now.
Yeah, I think that's a great point, that when we think about innovative financing, it's not just about the innovation on the structuring of the finance, which Curtis talked in detail about all the innovation that's happening there, but it's also the innovation around the financing, which Dan, you're talking about the corporate PPAs, and that has just as much influence in moving the market around the innovation. But these are all great points. The only thing that I touch on with Kanin Energy is we're also focusing on a financial innovation piece, which is infrastructure as a service or energy as a service, where we work with industrial hosts in financing their industrial efficiency. So rather than paying for the stuff up front, which is typically a longer hurdle rate or a longer payback period, we can finance that off balance sheet and more efficiently use capital that way. So that's also another innovation. Little plug for my company there. All right, so moving on, what should we understand about the role of transitional finance and improving the investment into brownfield projects? Yeah, any takers on this one? Or I can go. All right, well, yeah, go ahead, Curtis.
No, go ahead, Janice.
Yeah, so I think that this whole concept of transitional finance is really important. I think it's new, but when we look at the host, our industrial efficiency host, there's a more and more need from pressures from their investors. Like we work with oil and gas companies, for example, pressures from their investors to look at energy transition, but there is not the availability of capital out there to finance this. A lot of money is moving away from these industrial resources. So I think there is a role here for banks, private equity, even venture capital to step in and say, if we really want to move these big emitters onto a sustainable future, we need to open up the capital now and de-risk it for them in a way that is aligned with how we've financed solar, wind, energy storage, and other things. So I think I don't have necessarily an answer here, but it's definitely a call to action for the investment community to step up and think about this new potentially asset class and this opportunity.
I think, in general, there's not a constraint on capital for good renewable energy projects. I actually think there's an overabundance of capital, but the key point is that they need to be, well-structured projects. So, investors, I'm finding, are interested in investing in clean energy, but when it comes down to actually making the investment, it's done on, on a, very rigorous financial and economic analysis. But, assuming projects can be properly structured, I think there's an abundance of capital out there. I think the challenge though is the expectation of returns. So, a risk-adjusted returns. In fossil fuels, so, traditional fossil fuel companies, during high commodity prices, got very used to, very high equity returns, potentially in excess of 20% returns on equity. But on a renewable energy project, you're looking at a very different risk profile. They're typically long life assets backed by a long-term offtake agreement, which doesn't expose them to commodity risk. The fuel is free, operating costs are really low, and commensurate with that sort of project profile, you're seeing returns that are much more modest for renewable energy projects. And it's trying to reconcile, and I think it's something that's going on right now, is trying to recalibrate what return expectations are for different asset classes, but all kind of within the context of really low interest rates currently and for the foreseeable future.
All right, moving on. What is the role of the government? Do people understand the importance and potential role of the municipal, state, provincial, federal governments?
Yeah, let me weigh in here. Government has a very important role to play. When I think of the clean energy transition, I really think of three essential ingredients. One is technology, the other is policy, and another is finance or capital. We really need all three. For example, in the case of solar, we have good technologies and technologies that continue to get more cost effective. That's part of the puzzle. On the policy side, if it's at the residential scale, we need net energy metering or some other mechanism to allow people to integrate renewables into the grid. Or if it's at utility scale, we need access to transmission, a framework around power purchase agreements, and the right regulatory frameworks to allow renewables to be integrated again into the grid. And then finance, we need finance, both debt and equity, to capitalize these projects. So policy is a key part of it, developing those sorts of rules of the game. But governments also can play a key role in other ways as well. So in New York, for example, within the last year, both the state and the city government have enacted landmark pieces of legislation around driving opportunities in clean energy. In New York State, it's the CLCPA that's mandating significant amounts of offshore wind, and government is playing a key role in the auction market in developing the T&D infrastructure, and that's going to be a very successful market over the coming years. At the city level, New York City aren't a lot of places to put large wind turbines in New York City, but New York City is doing a lot around building codes. Is requiring buildings to post letter grades for building energy efficiency. Since we're at a university, people are familiar with the A through F gradings mechanism. New York City buildings will now have an A through F on commercial buildings for their energy efficiency. Doesn't cost governments anything, but it allows people to choose spaces for residential or commercial use that are more energy efficient. that provides a revenue framework for building owners to do energy efficiency improvements. So there are a lot of things governments can do, and not all of them cost a lot of money, which is really important given governments dealing with COVID-related deficits.
If I could steal one of Dan's earlier points, just talking about like the shifting role over the last 10 years, whereas in 2010 when the Ontario feed-in tariff started, like that was a fairly normal way for a renewable energy market to kick off, because it kind of needed that, because the economics were where they were. In 2020, one of the hottest solar markets in North America has been the state of Maine. Whereas 10 years ago, it may have been a feed-in tariff, and that Ontario feed-in tariff, when it started, was, in terms of area of magnitude, paying a premium for solar in the mid-scale space that we're in, of called 5 to 8 times what energy was otherwise available for on the grid. Whereas in Maine, the only thing that shifted was net energy billing, which allowed us to install a solar project in one place and line up off-takers in other places within the same grid. All it was a little regulatory tweak, and that really unlocked that market. So it just shows, I think, that the shift in the government role, and we don't necessarily need them in the same weight that we did 10 years ago. It's really a modernization of regulations and allowing the low cost of solar in this case to do what it can do.
And Janice, maybe if I could follow up with an Alberta example, being resident here in Calgary and developing in Alberta. There's a provincial thing to know about power is it's typically within state by state, province by province jurisdiction. So every province in Canada has its own unique regulatory framework and own unique market dynamics. The same with every state in the U.S. But here in Alberta, we're the only deregulated power generation market in Canada. It allows for, it's the only market in Canada where today it allows for bilateral contracting between projects and off-takers directly. That is a policy that has continued to be supported and maintained by the current, the current Kenney government. But there's another policy I think that's even more important, is the carbon pricing we have. So there's an ongoing argument between the province and the feds on the retail carbon tax, but Alberta has an industrial carbon pricing through what's called the TIER program, the Technology Innovation Emission Reduction Program. We have some of the strongest industrial carbon pricing in North America. That allows, in the case of renewables, the ability to create offsets, which can be used by the emitters with compliance obligations under the program. And that's really underpinned. That's a, key commercial or key policy underpinning that's enabling us to see growth in Alberta at the moment. So an example here at home.
Great. All right, so moving on here, what opportunities can our workforce explore in clean energy? Do you have examples? Switch the topics up a bit. Maybe Nick? I know you have quite the workforce behind you.
Yeah, no, sure. I mean, I think I think at the base level, I would say that all of the jobs available in other industries, including in oil and gas, are in essence available here as well. We employ engineers, we employ people in our finance department, we employ project managers and construction managers, we employ solar developers and so on. And I think that whereas again, kind of going back to when we started the company, it felt like everyone was new to this sector and kind of trying to figure out some of these basic business models. Nowadays it's much more a matter of slotting people in to these kind of more basic roles. And so I think from that perspective, there's a tremendous amount of opportunity, and I've heard already there's a lot of growth expectations for the years ahead here.
Great. Dan, anything to add for Canada and Alberta?
Yeah, I mean, there's all sorts of jobs in the ecosystem that's created around the renewable energy sector, and we have a budding ecosystem for renewable energy here in Calgary. A number of Canada's leading renewable energy companies are based here in Calgary, which is might be surprising to many, because most of us think of ourselves as the fossil fuel capital or oil and gas capital, but there's lots of other great things going on here. I think tremendous opportunity, tremendous construction opportunities, tremendous opportunities, for engineers, consultants, lawyers, finance people. There's a whole ecosystem that supports the development of this industry. We have that really well established for oil and gas, and I think some natural ways of porting a lot of our expertise and innovation. And I think not the least of which in Alberta is our entrepreneurial spirit. Entrepreneurial spirit has built our province, continues to drive our province, and I think leaves us extremely well suited to take on challenges ahead of us.
And I echo that comment. Just building, having spent the last 5 years in San Francisco, now moving back to Calgary, the entrepreneurial spirit is definitely strong and definitely comparable to what I see in California in the energy sector. So definitely echo that. All right, so last question, and then we're going to get to Q&A here. So many Albertans feel uncomfortable and challenged by the perceived challenges they face around the energy transition, leading to a polarized narrative about our future economic success. How do we upgrade the internal narrative around Alberta's opportunities in the energy transition? And Curtis, you haven't spoken for a while, so I'm going to call on you first.
Yeah, it's a little bit hard being based in the New York area to comment on how the Alberta narrative should play out, but I think a couple of takeaways perhaps. One is that this is an opportunity. This is an enormous economic opportunity. And it doesn't have to be either or. I said that earlier, I'll repeat the point. It doesn't have to be either or. There are lots of opportunities. Dan is a great example of that, doing the largest solar project in Canada in the heart of Alberta. So I think that's an important thing. One thing to realize is that the energy infrastructure is incredibly old, and the energy infrastructure is also very long-lived. And so this is not a 1 year, 3 year, 5 year opportunity. This is a massive long-term opportunity. I can't speak to Alberta, but certainly in the United States, the transmission and distribution infrastructure is 50 to 100 years old, in some cases older. That needs upgrading. If you look at how homes are built, we're still using the same technologies that we used a century ago. If you look at transportation, electric vehicles, we are simply scratching the surface. Once we start to have electric vehicles connected to your home and your home connected to the grid and the solar panels on the roof, people are going to have the opportunity to optimize. If you think of an electric vehicle, it's just a battery with wheels. There are so many opportunities here that we're really scratching the surface. And I don't know if this statistic still holds, but when I lived in Alberta and Calgary had the largest per capita proportion of engineers, business people, and technologists, computer scientists. And there's such an opportunity around every part of the energy ecosystem. I think that's the biggest thing. Nobody on this panel is going to demonize the oil industry in any way. The oil industry is very, very important and has been for many years. But this is an opportunity that Calgary and Alberta and Canada should not miss.
Great. Dan, maybe any thoughts here?
Echoing some of Curtis's comments, I think that the key thing that needs to change here in Alberta is the narrative that it's oil and gas versus renewables, and the narrative needs to change to oil and gas and renewables. I think, it's an attitude. I think in the province, there's I before COVID traveled quite a bit globally for my work and have exposure to things going on all sorts of places in the world. But coming back to Alberta, relatively speaking, I think there's a little bit of collective denial in terms of the way the world is headed. I still regularly face questions about the viability of wind and solar, despite having successfully raised close to $2 billion for projects unsubsidized. But I don't think that denial is serving us. I think what we need to do is accept, or even better, embrace the change that's underway, and recognize the tremendous opportunities that it creates for all of us in all the ways that Curtis has described. Because I think this opportunity, coupled with our entrepreneurial spirit and innovation, creates tremendous potential for Alberta, and I'm confident that we'll get there.
Great. Yep. And Nick, any thoughts here?
No, just to echo what all of yourself said. I mean, I think just to pick one other data point from before, the International Energy Association says solar will be 80% of all new energy capacity by 2030. So it's not going to be a straight line. Different places will move at different at different speeds. But yeah, the opportunity is massive.
Yeah, and I'll just leave here before going to questions with the comment that I agree with everything that everyone has said here. Having spent time in, as I was saying, in Silicon Valley, and then now being back in Calgary in Canada, I feel like there is this polarization narrative that is getting in our own way and in our own best interest. And so if we can, regardless of what we believe is right or wrong, or where things are going, just getting ahead of that and saying, okay, even if it was, if clean energy is here to stay, what are the opportunities here, and move forward with that kind of thinking. That's what, spending time in Silicon Valley, people just embraced the changes and the market and understood that it was dynamic and just responded very, very quickly. And there was an entire ecosystem around that city, from investors, policymakers, entrepreneurs, that were built to react very quickly to changes in the market. And if Calgary and Alberta can get there, create that infrastructure for innovation and reaction, I think there can be a lot of benefit that we see in our economy. Great. Okay, so let's move on to Q&A. We got a lot of questions here. And keep them coming. There's an upvote section for this feature, so feel free to do that. Okay, so the first one, what role do each of you think hydrogen will play in the future energy mix? Furthermore, what does the financing landscape look like as far as interest in hydrogen production, storage, and transportation? Any takers on this one?
I could start. So I think there was a hydrogen seminar or webinar earlier today with lots of interesting ideas, but I'd say in order to reach a net zero target by 2050, we need to pursue all sorts of different ways to decarbonize our energy system. Electrification, wide scale electrification is one of them, but there are other parts of the economy or the energy system that are not as well suited to electrification, and that's where hydrogen comes in. Heat, for example, is one of them. Heavy shipping is another. See how it all plays out over the coming years as we decarbonize. But I think there's going to be an important role for hydrogen. That said, it's not as mature today, at least in North America, in terms of being able to put together the pieces that allow for a large scale financeable project to come to fruition. I think there's lots of hope, but relative, I think, to other parts of clean energy like renewables, it's still a bit behind, but I think there's going to be a role.
I think just to amplify one of Dan's comments, this isn't a choose A or B or C. This is a choose all of the above. Because we need all these strategies. We have various segments of the market. We have various sectors of the economy that require energy. Hydrogen is going to be well suited as a fuel in some applications and less so in others. I'm not an expert in hydrogen, but what I do know is that the production of hydrogen often takes a tremendous amount of energy. So maybe hydrogen production will be facilitated by one of Dan's utility scale solar plants. There are lots of opportunities here to combine these technologies, just like we're seeing solar plus storage creating carbon-free, generating assets. So I think there's a role for hydrogen, absolutely, but that doesn't diminish the importance of any of the other sectors being pursued.
I think maybe to be a bit more provocative, I think we've heard about hydrogen being on the cusp for most of our lives, and I think it probably will have some level of a role. I'm not an expert in it either, but I look at some of the pace of change of the cost of battery storage, the cost of solar, some other things that are going on, and I my hunch is that it's going to remain maybe more niche than some of these other technologies.
Yeah, and my only addition to that is if we really want to create a hydrogen economy, we really need to focus on creating the transportation system for hydrogen. That's the biggest cost driver. So we need to drive those costs down to make it economically viable. All right. So what is the role of battery tech for energy storage? Do you see developments there?
Dan is shaking his head. I'll make a few quick comments, but battery storage is probably the biggest opportunity, I would say. No disrespect to the solar and wind developers, but every one of us has a lot of devices like this that are powered by lithium-ion battery technology. And it's not just lithium-ion, it's other chemistries, and they're being used in household implements, they're being used in transportation, and they're now being used in the power sector as well, for things like frequency regulation, black start capabilities, but also to create, again, carbon-free generating assets that can operate when the sun's not shining and the wind's not blowing. So battery storage is a huge opportunity, and I think we'll continue to see lots of innovation around that.
Yeah, and I enthusiastically agree with Curtis. I actually think that's probably the biggest piece of energy transition that is not yet here, but is on the cusp and is going to fundamentally change our energy system. The challenge with renewables today is that they're intermittent. So the wind farm produces when the wind blows. Solar farm produces when the sun shines. But what happens when those conditions don't exist? And the challenge with electricity systems is large-scale storage is not yet viable. But that's where batteries really change things. Battery costs have been following a similar type of declining cost curve as solar, just a few years behind. And I think it's going to be certainly this decade. I think in the first half of this decade, where we'll start to see batteries coupled with renewables being cost competitive with fossil fuels. And that now turns renewables from an intermittent source into a base load, something that looks much more like a base loaded source of energy. And yeah, I agree. I think there's tremendous opportunity in that going forward.
Nick, any thoughts on your side?
No, just that the economics are following the same cost curve that solar did, and definitely imagining that battery storage is going to play an ever more increasing role in renewable energy going forward. It's I don't have the numbers at my fingertips, but when you look at the cost curve of, for example, lithium-ion batteries over the last 5 to 10 years, you see the same type of cost curve as you did in solar, and that's exciting for where this is going. And actually, I was about to say earlier on the I forget which question it was, but on misconceptions or something. I think, or maybe it was related to like the transition and the culture around that. Is that, I think when you hear that solar is intermittent or wind is intermittent and what have you, if you're on the side, for lack of a better term, of fossil fuel, it might be easier to think that, okay, like that's a good protective barrier for us. But I think if you actually take the other side and think about, is that really a barrier and how do we solve it? You come down to things like battery storage and so on, and it's just a huge additional opportunity.
Absolutely, and the fund that I worked at, Generate Capital, funded a lot of energy storage projects. They're one of the first investors in energy storage in the United States. And one thing that I always thought about when looking at energy storage deals is that I don't think the world can get to clean transportation or clean energy without development with batteries. So it's a key piece to get to decarbonization more broadly. And I guess hydrogen can fill the rest in terms of decarbonized heat. Okay, all right, next one here. What is the capital cost of renewable investments? Lower than for conventional energy? How is the availability or access to financing? So what is the capital? I think there's a few different questions in here. So let's break it down. So what is the capital cost for renewable investments right now? I think we all have an opinion on this one. Dan, do you want to maybe go first and talk about the capital costs in Canada?
I mean, the capital costs, keep on coming down, but the answer is it depends. It depends on the jurisdiction where the project's being built. It depends on the size of the project, because larger projects tend to have, better economies of scale. And it's difficult to do an apples to apples comparison with traditional energy projects, or fossil fuel energy projects, to a renewable project strictly on a capital cost basis, because you also have the operating profile. The case of renewable energy projects, the fuel is free. It's sunshine, wind, hydropower. It's difficult to compare on an apples to apples basis, but I'd say in that way. But I'd say generally speaking, you're looking at projects that have, in the case of renewables, long lives, relatively low risk return profiles, and are seeing returns that are commensurate with that. In a low interest rate environment, you're seeing returns becoming increasingly compressed for renewable energy assets, because like I was saying earlier, there's a relative scarcity of good opportunities to invest in compared to the capital that's looking for a place for a home.
Curtis, any thoughts on that, on even just the competitiveness of capital and the cost of efficiency and generation?
I would say on the renewable side, I defer to the gentleman on either side of me on the Zoom here. But as far as energy efficiency, the cost of capital is very low as well, because energy efficiency is incredibly stable. Typically, you're investing upfront in certain measures, and there's an incredibly stable revenue stream associated with that. Lower risk means lower return. Those projects can attract proportionately more debt, and that debt is lower risk. So I think that cost of capital is very attractive. Renewables and energy efficiency in general, as Dan alluded to, the primary cost of renewables is the capital cost. The sun is free, the wind is free, operations and maintenance costs are relatively low. It's really all about capital costs. And we're now in basically the lowest rate environment we've seen in many, many decades. So renewables have been helped by that and will continue to be helped by that for the foreseeable future.
Nick, anything to add here?
No, I think I think they covered it. I mean, I think we're in a low interest rate environment. I think there's a lot of demand for long-term yield, and there's few places to look for it. And there's a lot of demand or interest in investing in this sector, maybe in part because of the political risks of investing into other sectors. So I think on that basis, I think it just helps fuel the transition and the growth of this sector in the years to come here.
Yeah, and there's the part of the question that talks about how does renewables and the cost, when I look at cost, I think of the levelized cost of energy, or the LCOE. How do renewables compare to traditional fuels like natural gas and coal? And I've seen many charts that iterate this message that coal is the most expensive, natural gas is the second most expensive, toss up between wind and solar. And that's how it goes. So wind and solar is generally the most cost effective on a levelized cost of energy basis. It's the cheapest cost of energy now. Anything to add there about that statistic? Because I think people who aren't paying attention to how the cost curves have come down are actually surprised by that statistic.
Yeah, I think that you're right about the numbers, and I talked about some of those at the outset. A lot of people would be quick to point out, well, but you're comparing apples to oranges, because solar and wind are intermittent and natural gas is a dispatchable resource. And that's true. You can't have a system that's 100% reliant on intermittent resources. But storage is changing that equation. So if you think of, for example, in Hawaii, where there's been a lot of investment in solar plus storage. Right now, solar plus storage utility scale is getting done at $80 to $90 a megawatt hour. That's extremely, extremely attractive in any market for carbon-free energy. Now, You would also be quick to point out, well, Hawaii has a great solar resource and fossil fuels are very expensive. All of that is true, but coming soon to a theater near you. The storage technologies keep getting cheaper, solar gets more efficient. We continue to see greater scale, both in the investments and in the financing, reduced friction costs on the financing, which are still very sizable in some parts of the renewable and energy efficiency sector. So we really have the opportunity when renewables are coupled with storage to create carbon-free generating assets. And once everybody has an electric vehicle in their garage, people then can address distributed energy intermittency as well. So this is all, we can see where all of this is going.
And maybe just to unpack one piece that you just said there, Curtis, about the friction around the financing bit. So there's a lot of kind of, I think the best word is the friction. There's costs to be taken out. Can we talk about that a little bit more for those who are watching here that don't understand finance at that level?
So I'll give a few thoughts from the US perspective, and Dan, I invite you or Janice to comment on the Canadian perspective. So for example, in the United States, we have a large investment tax credit for renewable energy investing, and a lot of developers can't take advantage of the investment tax credit because they're not producing taxable income because of things like accelerated depreciation. So we've developed a tax equity market where we have a class of investors that has tax capacity, in other words, has a lot of taxable income that invests in the tax attributes of these investments. That's bringing a third layer of capital into the capital structure. So in addition to debt and sponsor equity, we now have tax equity. Tax equity, I would argue, gets paid very well relative to their risk profile, in part because it's limited to a specific class of investors. It's complicated, and you need investors that have tax capacity. That is driving up the cost of renewables. Now, as the technologies get better and as the ITC continues to decline, that will be less of a factor, but that's just one friction. The other thing we see is just generally, if people are taking out a real estate loan or a small business loan, these are products that have been around for a century or more. We don't have that same thing for energy efficiency loans backed by ESAs or project loans backed by power purchase agreements. Once we start to see them become as commonplace and bundled and securitized and standardized, we're going to see costs come down, both upfront costs and interest rates, because we'll have a more liquid market. Dan, thoughts from Canada?
Yeah, I totally agree with your comments on tax equity. I'd maybe even take it a bit of a step further. It's kind of like a little industry that's been set up for all the advisors and consultants that serve it more than the the beneficiaries of the capital.
And the lawyers.
And the lawyers, yeah. But good lawyers are worth good money. But in Canada, we don't actually have that dynamic. So we don't have any federal program at the moment that is directly supporting large scale build out of renewables. The government released its fall economic update last week and talked about how there's going to be details around clean recovery coming out in the new federal climate plan that's going to be coming out later this month. So there might be new programs announced there, but at the moment there's no federal incentive. So from one perspective, that additional incentive that exists in the United States doesn't exist in Canada, but the other side of it is it makes execution of projects relatively simpler from a financing perspective, not having to deal with the tax equity layer in the capital stack. But just want to add one other point. So we're going through this energy transition, and the case of Alberta, we're going through a repowering of our power sector because we're moving off coal, and it's going to be over the next decade a competition between gas and renewables in terms of filling the void that's going to be left by the coal coming offline. And if the feds are so desirous, there's an opportunity for them to potentially tilt the playing field in favor of renewables, so that more of that goes to renewables as opposed to gas, and that's going to be something that plays out over the next decade in Alberta.
Yeah, well said, everyone. I think there's not just the capital. I think this goes down to what we were saying earlier. It's not just the capital, it's all the things around it to enable it to act frictionless. So there's a lot of opportunity there. So ways to go to cut cost. So, okay, so moving on, we got a lot of questions here. We've got 15 minutes. So speaking of transition, are investment trends heading towards using existing oil and gas installations to produce renewable energy such as solar? Yeah, this is an interesting one because maybe Dan, because you're more Alberta based, have you been working with the oil and gas industry and using their assets to do solar and wind and other kinds of infrastructure?
Sorry, if you could just repeat the question. I could answer the second half, but if you could just repeat the first half of the question.
Yeah, speaking of energy transition, are investment trends heading towards using existing oil and gas installations to produce renewable energy such as solar? So are we able to retool the existing oil and gas infrastructure for clean energy?
I mean, there's definitely an opportunity for brownfield development on on oil and gas sites, but in general, renewables tend to benefit from from economies of scale, and a well site, for example, is relatively small area, can't fit a lot of energy, but we also have an issue in Alberta in terms of the reclamation liability that's now being borne by Albertans, as a lot of oil and gas companies have unfortunately walked away from those obligations because they haven't been able to satisfy them. So brownfield development on those sorts of sites might make sense within the context of the overall reclamation liability that our provinces face. So an interesting opportunity. Do I see it as being a silver bullet to repowering Alberta? No, but there is some opportunity there.
Just anecdotally, Janice, so I'll just briefly say that we haven't on the brownfield side of things, I can't say we've seen too much, but I would say that we have seen some opportunities more recently that touch on that, from like a new more on maybe the mining side, but like the typical approach of bringing in diesel generators and so on is now undercut by solar in many cases. I don't know how commonly that's being done yet, but I know we've looked at some of those types of things. And then also just in the kind of oil and gas industry, within UGE, we have an engineering and consulting practice. And probably the last 2 years, what we've been busiest with is helping out with various solar plus battery plus diesel microgrids, including building out a whole neighborhood for an oil and gas company in Burkina Faso. So, I think you are seeing, and Curtis touched on this earlier in terms of some of the regions around the world that are developing a lot of solar. You are seeing those industries, those companies, those stakeholders recognize that there's situations now where solar is just too cheap to pass up.
Very cool. I had no idea about the mining. That's very neat. All right, so what role could ESG play to accelerate clean technology implementation in Alberta? Could ESG related funds support the transition? So let's split that into two questions here, because I think they're both important. So what role does ESG play to accelerate clean technology in Alberta? Maybe Curtis, any thoughts on your side?
Sure, I think there is a tremendous amount of interest in ESG investing, and you're seeing it with institutional monies, pension funds, et cetera. You're also seeing it at the individual level for retail investors or high net worth individuals. There's a lot of money going into ESG strategies. So having that pool of capital actually, again, capital is one of the pillars of developing clean energy technologies, along with policy and technology. So it facilitates it, but I think at the same time, just having capital isn't enough. It's necessary, but not sufficient. We have to have good projects. If there are good projects, you can get capital. You can get capital from ESG investors, or you can get capital from investors who maybe don't care a lot about ESG, to be perfectly honest. The key is finding good projects. And right now, I think all of us on the panel believe there are lots of great projects, whether your focus is more of clean tech, property tech, transportation, buildings, renewables, distributed, utility scale. There are a lot of opportunities, and ESG just provides a feedstock for capital for those opportunities.
Nick or Dan, anything to add here?
I guess I'm first. Yeah, I mean, I think actually Curtis summed it up very well there. I think you know, the more investment there is coming towards all aspects of the life cycle for ESG and whatever terms we want to use for it, the better. It doesn't hurt. And maybe the other part of that too is just in terms of you know, public support, the political will for regulations to be updated and so on in oil and gas and building codes and everything else.
I think the big change for that ESG really represents is a different lens within which investments are evaluated. You know, for a very long time, investments were evaluated on one metric: what's our return on a risk-adjusted basis, and that rewarded behavior that wasn't sustainably based. For example, the orphan well problem we have here in Alberta. There was lots of money made for a really long time on the back of those wells, and for some reason at the end of life, there's not sufficient funds there to ensure that they're reclaimed. So just an example. So what ESG does is it now puts a lens on investments. Sure, an investment needs to make money, but all things being equal, with an ESG lens, you're going to choose the investments where you can make money and also do good, or have some type of sustainable benefit. So just understanding that the lens within which investments are made, even within the capitalist system, like this is a capitalist system driven thing. There's this additional lens. And I think just understanding that attitude is really important.
Janice, if I could make one additional point on ESG investing, I think a lot of people look at it as a niche of the market, a growing niche, but a niche in the market. I think, let's step back a little bit. 20, 30, 40 years ago, international investing was a niche. There were people that invested internationally, there were global funds, but then a lot of people just continued to invest domestically, wherever their domestic market was, in Canada, the United States, in the European region. Now, I don't think there's a single investor on the buy side that doesn't think globally about every investment decision they make. Even if they have a company that operates in a region, they could have supply side considerations, they can have customers, they can have competitors. Any of the forces of competition and the forces within an industry can be anywhere on the globe. So international investing has basically become investing. And I think we're seeing the same thing with sustainability, and not just the environmental lens of sustainability, but social lens as well. Soon all investing will be sustainable investing at some level. People won't think about it as a niche. People don't think about technology as a niche. People don't think about global as a niche. And I think the same is true for sustainability. Unfortunately, capitalism has done a lot of great things, but it hasn't necessarily delivered shared prosperity for everyone. And I think people are trying to move that direction. And people with lots of business ideas that can capture that theme are going to find that there's a significant amount of capital and a lot of great partners and really exciting careers, by the way, as part of that.
Yeah, I couldn't agree with that more, Curtis. I think this misconception that ESG investing is a niche doesn't quite make sense to me, because at the end of the day, it's I think most investors invest from a risk perspective, and the thinking around the investor side is that the environmental risk especially is becoming a increasingly more forefront risk. When you think of PG&E, which is the utility in San Francisco, they recently went into bankruptcy because of the wildfires, which arguably can be caused by climate change. These are very real risks that these companies face in the spirit of climate change and in energy transition and such. So I think, yeah, again, this concept of a niche ESG investor moving the field and one day go away is just not reality anymore. So the second part of the question is related to ESG support for transition. Any quick thoughts on how ESG investors can support the transition financing?
Well, I'd say ESG investors, I think, need to be a little bit more sympathetic of fossil fuel companies. I'd say at least the conversations that I've been having, the waters get muddied a little bit when it comes to ESG investments that enable more oil and gas production, and that there's kind of a tension there. So when oil and gas companies are out there talking about, well, we're going to do these things to decarbonize our oil and gas production, which will enable us to produce more oil and gas, the natural tension with that is there's some on the other side that don't want to see more oil and gas being produced. But I think there needs to be a middle ground, and I think ESG investors should be looking more seriously at opportunities to decarbonize initiatives in the oil and gas sector. Even though it is in the oil and gas sector, it doesn't mean that those sorts of investments should be blackballed. And I think there are some examples of that going on, and I don't think that's helpful at all towards energy transition.
Okay, one final question, and then we'll get everyone to summarize their thinking here. So one last question around the grid. So it looks like the grid will become a bottleneck for renewables. What business models and financing do you envision to upgrade the grid to enable more renewable and higher throughput while keeping it stable?
Yeah, when I think of the grid is really, and the traditional electricity regulation is really a very old and out-of-date system. This kind of reminds me, for those of us of a certain age, when if you wanted to call long distance, you had to call certain times of day or avoid certain times of day because the cost was higher. There was the notion of peak load pricing. That was in the phone, in the phone sector 30, 40 years ago. If you've taken an Uber, you're familiar with surge pricing. Yet in the electricity system, you generally have the ability to get an unlimited amount of commodity at the same price at any time of day. It's one of the very few industries where you can do that. So I actually think with advanced metering technologies, there will be an ability to shift for certain customers, to shift their demand to different points of the day, which will allow for lower costs of the grid, which will allow for an optimization of the generation fleet, and will drive down the costs of energy in a region. I think that's really interesting opportunity. The other thing that I think will be a related factor is if you think of automation or robotics. Most industrial plants that are powered by humans operate kind of a 9-to-5 schedule. If you have robots working, you can have robots working in the middle of the night. They don't care. They don't sleep. You can have a lot of shifts in the demand side that we really haven't priced into the market. And I think all of those, once we start to think more about the demand side, we can really shift how the grid is used, and we can shift how generation assets are used. We can use, we can have all the robots working in the middle of the day to take advantage of Dan and Nick's cheap solar energy, or we can have them working at night if we have low cost geothermal or other renewable baseload resources. So I think there's a lot of opportunity there, and in addition to just modernizing the grid.
Great.
I'll just say, anecdotally, I, during COVID here, I moved out to the suburbs, like so many have, and I started wondering why the power keeps going off anytime the wind picks up. So I kind of traced back where our power lines come in, and there was no less than 4 power poles that were snapped and tied to a tree with rope to hold up. And I think, this is just my experience, but this kind of speaks to how antiquated our grid is in so many ways. What that means, I'm not totally sure, but I know that it certainly drives distributed generation. It certainly drives battery storage. Are all of those utility lines going to be upgraded? I don't know the answer to that, but I just know that there's a lot of work to be done. And in the meantime, you have these decreasing costs of generation, these decreasing costs of power storage. And I know in my neighborhood, virtually everyone has some level of backup system now. And so, maybe it's more of a question than a forecast, but that's my experience at least.
And just to add one other element in, all that's within the context of, potentially exploding electricity demand with wide-scale electrification of transportation. So Tesla's now, the most valuable automotive company in the world by far, as it's been pretty well told, but still make up a very small percentage of the vehicles on the road. But almost every single major automobile manufacturer in the world's got aggressive EV targets, and by the end of the decade, it's not inconceivable that the majority of new car sales will be EVs. Well, where's all that charging infrastructure going to come? Where's all the electricity supply going to come to serve, a fundamental change of our energy system? And that's a very difficult thing to plan for and forecast. Disruptive change is something that's very difficult for, very conservative organizations like system operators whose primary mandate, has been to keep the lights on, 99.9 or more percent of the time. So how do you balance something that's, that's traditionally been focused on very high reliability in the midst of, this disruptive change? And that creates, again, I see challenge, but I see opportunity in solving those challenges in a very exciting decade ahead.
Yeah. Great. All right. I'm getting cues, so we need to wrap up here. So if everyone can just have a quick summary of the key takeaways that you want for our guests. And if you can also talk about in that summary any words to the students or MBAs that are at Haskayne that want to make this a career choice. So, all right, maybe we'll go with Dan first.
Yeah, thank you, Janice. Thank you, Nick and Curtis, for an interesting discussion. I think it's important we understand that the world is going through an energy transition. It's something that whose pace is increasing. And out of that comes, some fundamental changes to our economy. I think we're going from an economy here in Alberta that's been, very dominated by the oil and gas industry to one where the oil and gas industry will remain an important part of our economy, but increasingly diversified. And this energy transition creates tremendous opportunity. And I think with our innovation and entrepreneurial spirit, we will rise to the challenge in Alberta, and will remain prosperous in the years and decades to come.
Great. Nick, anything from you?
Yeah, no, I think great discussion, and thanks, Janice, for hosting it here. I think that we touched on all these like similar terms over and over again, right? The entrepreneurial nature of Calgary and Alberta, the pace of change here in terms of the economics, et cetera. Maybe the only additional thing I'll say is that from my own experience, I feel that this sector is incredibly collaborative. And so, maybe, I think we're all here on this panel to help bridge that divide and answer those questions as best we can. So, speaking only for myself, feel free to reach out. We're all here to work together and find ways that we can work through this transition together. Absolutely.
And Curtis, last thoughts?
Thanks, Janice, and thanks to my fellow panelists. I think this has been a really interesting discussion. So growing up in Alberta in the early 80s, there was a famous bumper sticker, and many of you know this. I'll edit it slightly for a G-rated audience. Please God, let there be another oil boom. I promise not to pass it all away this time. And what we don't want to see as people who are all devoted and care deeply about the Albertan and Canadian economy is that in 5 or 10 years, we see a new bumper sticker. And that bumper sticker says, please God, let there be another global energy transition. I promise not to miss the huge economic opportunity this time. So I think it's really important that people are on their front foot on this. You think of a place like San Francisco. San Francisco was founded because of a gold rush. It was founded because of a commodity boom. San Francisco is now a tech capital. That didn't happen overnight, but economies can shift, opportunities can be capitalized upon, and energy is in the Canadian, Albertan, and Calgarian DNA. So, carpe diem. This is a fantastic opportunity, and it doesn't mean we have to shut down the oil sector overnight either. So take advantage of the opportunity. I'm really excited for the future of Southern Alberta.
Perfect. Those are some great last words. So yes, thank you, panelists, for speaking today from your experience in leadership in the clean energy transition, iterating all the thoughts here to wrap up. This is a huge opportunity. Alberta has this great entrepreneurial spirit to pick it up and create a new bustling economy for the next generation. So super excited to be a part of this, super excited to be born and raised Calgarian and to be back. Yeah, and excited to help those that want to be part of this, to help them bridge, as Nick was saying. So with that, maybe I'll kick it back over to Terry and the team to close us off.
Wonderful, thank you, Janice. And I really found it profound about the discussion, and I really love the fact that you took the discussion at the end towards our perception of the opportunity and the importance of our mindset and looking at the challenges ahead as something that Alberta has all the resources we need to become leaders in this space, largely based off our entrepreneurial mindset. So thank you. And Curtis, I may follow up with you about actually making that bumper sticker happen, because I think that would be fantastic. Maybe t-shirts too, we'll see. Thank you again, Dan, Nick, Curtis, Janice, for sharing your strategic insights, your hard-won experience, and pragmatic recommendations. And Janice, thank you so much for taking on the moderation of this panel. You did a fantastic job driving the conversation and engaging on audience questions. I'd like to thank Enbridge for the support of these events. And we really do appreciate the support they give us to have these strategic conversations. I'd also want to thank our Haskayne team and all the production and the work that they did in putting this event together. There's a lot of hard work behind the scenes, and we couldn't do it without all of them. So thank you. We have a survey in our link that will give us some extremely valuable feedback about the event, what you liked, what you didn't like, what you think could be better in the future. So please do give us feedback. It does help us to improve. I want to thank you, our audience, for all of the time that you spent with us. You could be anywhere in the world, and we really do appreciate you taking the time to be with us today. And finally, I want to also just point you to a link in our chat for the upcoming Petronas event on January 28th. This is a really important event, and it will be a seminar on Canada's successful path to 2050. Our panel is going to include Tengu Mohamed Tawfiq, who is the president and CEO of Petronas Global, the Honorable Seamus O'Regan, Canada's Minister of Natural Resources, Maria van der Hoeven, former executive director of the International Energy Agency, and our moderator for that panel discussion will be Jackie Forrest, executive director of the ARC Energy Research Institute. Registration is open. You can click on the link there, and it is a complimentary, no cost to attend event. So thank you all. Really glad you were able to join us today, and we look forward to seeing you again. Bye-bye.